All right. It is 12:04. Thank you everyone for joining us. This is session 2 of Money Talks, Personal Credit versus Business Credit. We really want to, thank our sponsors, KeyBank and 5 Star, for making this possible. Just as you can see kind of here in a little snippet of information, this is a 4-part virtual workshop series on personal finance and credit, financial organization and routines, financial independence, being your own boss, and most of all, leaving a legacy for your family. Just a heads up, folks, once you've completed the full session today, you'll get the option between 4 restaurants to get a voucher so you can go have lunch, support, local restaurants. We have 2 restaurants in Buffalo, that's Manna and Taste of Siam. And we have 2 restaurants in Rochester, and that will be Peppa Pot and Good Damn Chicken. I believe that's what it's called. Later on in the chat, we'll go ahead and ask you to comment on which restaurant you choose. I'm sorry. You can send me a chat directly. As you can see, I can't see it, but you should be able to see it. I'm Jahaida Zapata. I'm one of the business development officers here at Pastone Enterprise Center in Buffalo. Feel free to reach out and let me know, what you'd like to have for lunch today. All right, that being said, second order, if for some reason your name, you have like a nickname or anything listed on your Zoom ID today, if you could please just click the More tab next to your name and rename so we can see your first and last name. That'll help us make sure that we get your voucher out to you and we're not trying to guess, who picked what. So that would be greatly appreciated. If for some reason you don't do it or you forget, Adam Tidrow, which is our one of our other business development officers at Pastone Enterprise Center here in Buffalo, he'll reach out to you. So there's no stranger danger. He's one of the good ones. So he'll reach out to you and see what you're looking to eat. Okay. All right. That being said, stars of the show, we have David Kraus of New Level Strategies and Letitia Harris, officer of Financial Jevity. They are the folks that put this content together for you. So they're going to be, your friends all the way through to the end. If you have any questions throughout, please feel free to comment in the chat. Adam's going to go ahead and take a look at that. If you feel more comfortable asking your question yourself, feel free to unmute yourself. But in the meantime, keep yourself muted just so we don't have any background noise going on while Letitia and David are presenting. And because this is live and recorded, if you prefer not to have your face kind of out in the world, just go ahead and turn your camera off. But you're still, obviously you can still hear us and you're still free to, make a comment or ask any questions. All right, that's my spiel for today. And David, take it away.
Thanks, Jahida. Yes, I'm David Kraus. I'm a partner with New Level Strategies. And we've been in business 4 years this month. So we're celebrating our anniversary. And we provide services, a variety of business services to the nonprofit and small business communities here in Western New York.
Hi, I'm Letitia Harris, officer. I'm founder of Financial Jevity, where we believe financial education leads to longevity, and I focus on personal finance and credit. Please stay to the end of the video and we'll show you how you can get an opportunity to work with me directly, and it will be provided by our sponsors. So again, thank you to our sponsors, KeyBank, Pastone, and 5 Star Bank. Before we get into the workshop, we're going to do a brief poll just to confirm how you heard about the workshop. So please complete it. It's anonymous.
Here's that Jeopardy music. I know you guys like from last class.
Looks like people heard about it from an email from Pat Stone. That's great. Keep those emails coming, Pat Stone. Pat Stone's getting good feedback. This is really helpful for everybody to contribute like this because we know how best to market the sessions. So thanks for your participation, everybody. All right, Facebook. Facebook and Pat Stone are the winners. UB. Great, that's helpful. First question we want to ask is, back on that last slide, we had a question that said, what was your first experience or encounter with credit? So if you wouldn't mind commenting in the chat window about that.
Yes, please comment in the chat. You know, what was your first experience? I know for me, my first experience with credit was getting student loans. I was able to get them, you know, with the help of my parents, but that was my first experience. How about you, David? What was your first experience with credit?
That would be for me taking out a loan to buy a car when I got out of college, but I had my parents co-sign, so I got help as well.
Right. I see we have people commenting as well. They got, you know, a denial or financing a car, house mortgage, trying to buy a car, college loans, furniture. Yeah.
Store credit cards. Parents co-sign for the car. Yep. These are all very typical uses of credit, as we all know. Thank you for that feedback, folks. Now, there's a few things we're going to be discussing today. We want to talk about what is credit. We'll start, you know, at a high level, go right into what is credit, and then we want to talk about why it's so important. We'll spend some time on how to improve your credit, give you some tips and pointers, and lastly, we'll touch on business credit towards the end of the session and how that might differ from personal credit. Everyone remembers Who Wants to Be a Millionaire, because now we have game time. Go ahead, take it over, Letitia.
Yes, so we're gonna play Who Wants to Be a Credit-naire? And it's similar to that. So we'll just keep a tally or comment in the chat your answers as we go through the slides so that we can determine if we're, you know, going in the right direction here.
All right, first question we have is, how many credit bureaus are there?
Answers in the chat. Did you guess right? There are 3 credit bureaus.
Everyone
Good job.
Next question. Are these credit bureaus government agencies or not? Yes or no?
Yes, a lot of no's. Did you guess right? Credit bureaus are not government agencies. Good job. I see a lot of people knew this one. Didn't get tripped up by that one.
I'm not tripping anybody up yet. So our next question, what are the names of the 3 credit bureaus? And there's your choices.
Yes, did you guess right? The answer was B. The 3 credit bureaus are Experian, TransUnion, and Equifax.
Okay, next question for us. Is Netflix reported to your credit report?
Did you guess right? No, Netflix is not reported to your credit report. Now, unlike some bills, Netflix is prepaid service, so they cut you off immediately. There's no collections to get or anything.
Solve the problem that way, huh?
Right.
Okay, our next question. Is your cell phone reported to your credit report?
Hello, yes.
You guessed right. The answer is no. Cell phones are not reported to your credit report. But if you do not pay them and they go into collections, that will be reported to your credit report. Good job, everyone.
Excellent. Okay, everybody, what's the lowest credit score you can have? There are your choices.
Did you guess right? The lowest credit score you can have is 300.
We've got the next question. What's the highest credit score you can have?
Did you guess right? The highest credit score you can have is 850.
Good job, everybody. Everyone's nailing these questions. What does subprime mean in the credit world?
Did you guess right? Subprime means bad credit. So an example, when we had the recession due to the housing crisis, those loans were made to subprime credit. So they weren't low like 300 or 400s, but they weren't high. Good job, everyone.
Okay, what can stay on your credit score, credit report for up to 10 years?
Did you guess right? Judgments can stay on your credit report for up to 10 years. Now, I know a lot of people put A in here, which is correct depending on what type of bankruptcy you file. Whether it's Chapter 11 or Chapter 13 will depend on whether it's 7 years or 10 years. Good job.
Thank you for that clarification, Letitia. That was helpful. Okay, yes or no. Are there any laws regarding credit?
Did you guess right? Yes, there are laws regarding credit.
Specifically, it's called the Fair Credit Reporting Act. It's out there to protect our rights. We'll talk a little bit about that later on.
Congratulations.
Woo!
If you had more than 9 right, you are a creditnaire. But don't worry, if you missed a few, by the end of this workshop, you too will be a creditnaire.
The next question we got for everybody, and we invite you to comment in the chat, is what words come to mind when you hear the word credit?
Yes, please comment in the chat.
What words come to mind with you, Letitia?
When I think of credit, I think of the debt, loans. How about you, Dave? What do you think about when you hear the word credit?
borrowing money and payback schedules and ability to make large purchases. We're seeing that in the chat.
Right. These are great examples.
Yep.
Score, loans, debt, financial agreement, money available,
Flexibility.
flexibility. I like that one.
Mm-hmm. It's great feedback. Keep them coming. Need.
So Dave, what is credit?
Well, I like to think about it as the ability to borrow money, because who's ever lending you that money is assuming you're going to be able to pay it back later. So.
Right. Credit is a noun, and it's the ability for a customer to obtain goods or services before payment based on trust that that payment will be made in the future.
Exactly.
Trust is the key word there.
Trust is absolutely the key word there. So now we want to talk about why is credit so important. And please, again, we invite you to comment in the chat. Any thoughts you have about that?
Yes, please comment in the chat. Why is credit important?
What do you think about that, Letitia? Why is credit important?
Credit is important because it affects all areas of our life. If you're looking to apply for certain jobs, they may run a credit check on you. Trying to obtain certain licenses, you can't have bankruptcies if you're trying to file for certain insurance licenses. Trying to obtain a credit card, a car, your car insurance rates can be affected by your credit. Buying a home, being able to get student loans. What do you think? Why is credit important, Dave?
All those reasons. You just can't purchase anything of any size in our society without kind of navigating the world of credit. So get loans, get a job, insurance. Seeing some good feedback in the chat window as well.
Yeah, I like this one that Sandra put, the ability to build wealth. That was a great one.
Mm-hmm.
Reputation, I like that one.
Everything does seem to be based on credit. I agree.
Yeah, everything. That was a good one as well. So Dave, when's the last time you checked your credit?
I do it about once a year. How about you, Letitia?
I track it every month, but if I'm trying to do, preparing for a bigger purchase, I might check it more frequently.
Mm-hmm.
So we're going to put up a brief poll for you guys to comment on, when's the last time you checked your credit?
These are good.
There's that Jeopardy music again.
January, last month, last week. Okay. Today. This is good. A lot of people are checking their credit frequently and recently. That's great. So now you folks probably already know this next question, but how do you get and where do you go to get your credit reports?
Right. You would go to annualcreditreport.com to access your credit reports. Previous to the pandemic, this site provided your report once annually. Now with the pandemic, you're able to access your report once weekly, and it provides access to all 3 credit reports, and it's free.
And I think it's the only authorized free site. Is that correct, Letitia?
Right.
And one strategy would be once they make that not as easy to get it every week or every month, you might want to pull one credit report, and then a few months later, you might want to pull another credit report, because up until very recently, you can only get your reports once a year. So you could spread it out over the course of the year that way. So now we're going to talk about what's on that credit report that all of you have so diligently pulled lately. There's basically 5 sections. It varies a little bit depending on the credit bureau, but there's a personal profile, name and address, and that type of thing. Then an accounts summary where you would have open loans and open credit cards. They'll break it out by type of credit. And public records is the next section. That'd be liens and judgments and those types of things. Credit inquiries. So if somebody's pulling your credit, that'll be on there. And then account history. So every credit account with a payment history, month by month, or the frequency of the payment is reported. And some of these, sometimes it's color coded, so it's really easy to read.
Right. Some things to think about when you're going through your personal profile, any misspellings of your name, any addresses that don't belong to you can be linked to accounts that don't belong to you. Free credit inquiries that you didn't create. This is like the first sign of fraud. Before fraud shows up later, you can nip it in the bud if you notice a credit inquiry that you did not create. Also, underneath your personal profile, if you see a name or that's spelled differently, that could be the first sign of fraud, and it's good to pay attention to that.
Absolutely. When you pull your credit report, the first thing you want to do, and like Letitia was just talking about, is you want to look for errors. And even more than that, challenge what's on that report, because if you look at things over the course of time, you might just assume they're correct. So start from the assumption that I need to verify everything on the report. Going back to those, right? Is that fair? Fair way to state it, Letitia?
Definitely. If they don't have the information, especially with those collections agencies where they're passing things around, if they don't have the proper documentation to show that this account belongs to them, or they even have a right to collect on it, you can dispute it and they have to take it off. They have 30 days from the time that you dispute to provide that information, or they have to remove it from your account. Also, when you're looking through your credit report, underneath account summary, if you do have some items that weren't so favorable, your credit report will actually show when these items are going to come off of your credit report. So checking your credit report is helpful in that manner as well.
Hi, Letitia, I don't know if you saw the question. Somebody had wanted to know what's the difference between free credit report and annual credit report.
So free credit report is provided through one of the credit bureaus, and it's actually not completely free. They'll provide it free for the first 30 days or so, and then after that, they would charge you for a monthly subscription. So when you go to annualcreditreport.com, it'll never ask you for like any credit card information. It's simply going to you'll put your information to identify yourself. They'll ask you questions that you should know is on your report to identify you further, and then they'll provide it. Whereas free credit report, they'll ask for the card information. They will provide that credit report, and most of the time it's not all three. It'll usually be whatever credit bureau is hosting it.
That's excellent.
That's a good question. Thank you for providing that.
So now we want to talk about how you get your credit score, because ironically, the score is not on your report, but everything in the report contributes to that score. So ideally, we all want to know what our score is. And Letitia, you can touch on some of these places you can get a credit score.
Right. So some of the ways you can get your credit score is creditkarma.com, creditsesame.com, myfico.com, as well as if you already have a credit card, a lot of the credit card statements will have your score on the statement itself. Myfico.com is not a free site. But this site provides your actual FICO score. FICO score is used by 90% of all lenders to provide credit to you. So this is the score that matters. So when you're using, Credit Karma or Credit Sesame, you have to be careful because those sites do not provide a FICO score. The Credit Sesame and Credit Karma, these sites provide a Vantage score, which is the score that the credit bureaus created to compete with FICO score. And it's weighted differently. So sometimes the numbers can be inflated or, your score will be a lot lower than what it actually is. With Credit Karma, it is a free site. And it provides your TransUnion credit score as well as your Equifax score. And it's a good way to see, if you're disputing things because it updates weekly. And those things will, fall off. You can see if they're actually coming off of your report or not when you're disputing it. Credit Sesame is also a free site. It only provides your credit score for TransUnion, but this site is more a literal site. So it's like a report card. It'll give you an A, B, C, or D, so you can actually see what areas you're failing in, and you can try to target those areas.
And if you're not sure which score a lender is using, you could ask the lender whether they're using a FICO score or a Vantage score, so that you're at least informed. You're an informed borrower then.
Right. And sometimes if you're declined for a credit card or any type of debt, they'll actually provide your credit score on the denial letter, and you can request a free copy of your report. Also, another way to get your credit report for free, other than the sites that we mentioned, would be from the credit bureaus themselves. They're required to provide your credit report twice a year for free. So you can also request it that way. Looks like we had a question: how accurate is your credit score from Experian? So Experian is the third credit bureau. Keep in mind, all three credit reports and all three bureaus will report different scores because some lenders do not report to all three credit reports. Experian is, if you're getting it directly from that credit bureau, that score is going to be accurate for what's on your report with Experian. So it will be an accurate score, but it's only going to be for Experian. And sometimes that score is going to be more favorable because previously most lenders loved to report everything to Experian, whereas your low score could be TransUnion or Equifax because those ones don't get items reported as often. But that score is accurate to answer your question.
Great question.
Yes, good question.
I think now we're going to look at what makes up your FICO score. We have a really cool pie chart that we want to look at for a second there. So the two biggest components of the FICO score are the payment history and the amounts owed. But there's those other three, and we'll drill into these in the next few slides. The other three are the length of your credit history, the credit mix, and new credit. So, and the Vantage score is very similar in terms of makeup of what's important. So, I mean, there's some common themes here that apply to both of these scores, no matter what score you're talking about.
Right.
So the payment history, 35% of your score is made up of payment history. Letitia, you want to touch on that and why that's important? Or?
Yeah, so this is the largest percent of your credit score is your payment history, and it's the hardest one to recover because if you say, for example, one missed payment can drop 100 points off of a 700 credit score. So you want to make sure that you are paying your bills on time. This is directly linked to any type of loan that you have and there's monthly payments, they're going to report those monthly payments. And when calculating your FICO score, they use the last 2 years of history to actually calculate the score. Whereas on your credit report, if you had the account for 10 years, all of that payment history will be listed. But when calculating the score, it's going to be just the last 2 years that's reported.
Great. Great concept. Thank you. So credit utilization or amounts owed, that's the next biggest piece to the puzzle. So what is credit utilization?
So credit utilization is specifically tied to your credit cards. So your store cards, credit cards, and it's the percentage that you're using the card. And it's an average of all of the cards. So say you have one credit card that has 0%, one credit card that has 50%, your utilization is going to be 25% because you're using 25% of the available credit that you have. This is a big one, but if you're trying to improve your credit, this score is easier to manipulate because you can pay down your cards and it's going to boost your score quickly.
Very good. So the next is age of credit, and long and short, there is longer credit history is better than a shorter credit history. Is that a decent way to state that?
That's definitely accurate. To even get to a point where your score is considered good in this area, you have to have at least 7 years of credit history. And this is why they say when you're younger, no credit is bad credit, because this score is directly tied to you using credit. So when you're first starting off, you don't have any history for them to go by. But once you get more use of your credit, like the longer you have credit, this is easier to keep up because they have all of those years to go by.
Excellent. So the next factor is total number of accounts. So having too many accounts is kind of a disadvantage, but you don't want to close accounts if they go dormant, do you?
Well, it's not from a management aspect, having too many accounts is a bad thing, but from a credit aspect, having too many accounts is not a bad thing because they actually have more history to gather from you using all of those accounts. So this is another one that's hard to manipulate. And this is when you're younger, you don't have any accounts to contribute to the scores, but the longer you have credit, this number is going to go up. And usually they're looking for between 10 and 11 actual accounts to go by history to make this considered a better score.
Okay.
Tisha, we have a question about credit utilization. How does, I'm sorry. How do student loans affect credit utilization?
Okay, so credit utilization is not affected by student loans because unless it's on a card, like you had a revolving type of loan that was on a card. But if it's just a regular installment loan, student loans is not going to affect the utilization score because that score is directly tied to credit cards. This is why if someone doesn't have a credit card at all, they're never going to have a perfect score because they have to have a credit card in order to get a score for utilization.
Next question, how much does accounts listed as high impact, how much do accounts listed as high impact affect your credit score?
So high impact would be derogatory accounts, which we're going to get into in just a moment. So I'll be able to better answer that once we go through that. And then.
Okay, another question. Lisa says, my student loans are in forbearance while I'm serving in AmeriCorps. Does that negatively affect my credit?
No, it's going to show up as a forbearance, so you're not reporting any payment history. That's the only way that it's necessarily not going to help you, but it's not going to show up as like you're in default or anything, which is why it's good for if you're in any type of financial restraint to call your student loans and get them into forbearance if you need to.
And a couple of people want to know, how does closing accounts that you're not using affect your credit score?
So closing your accounts affect your credit score negatively, because now that history is not going to be used when calculating your score, as well as that available credit is not going to be used in your utilization. So having a zero balance is not a negative thing, but if that card is now gone, and say before, using our previous example where we had the one card with 0% and one card with 50%, you close that card that had zero, instead of having a 25% utilization, now you have a 50% utilization because you only have the one card reporting there. And it's also not going to count as your, current total number of accounts.
Mhm.
And Melissa wants to know, what about when creditors close your account due to inactivity?
It's that same effect. It's going to have that same effect as closing the card on your own. Now that is not being used. That's why it's good to use it for one thing. Most credit card companies will close them after 4 years of no activity at all. I usually just have, like, for a lot of my cards, I have my Netflix, something that's fixed. It's a fixed amount. And then I have it set up where I have an automatic payment going to the credit card. I don't even have to think about it.
Great. These are some great questions.
Those are
Thanks
excellent
everyone for
questions.
asking those questions.
Yes, thank you for the good questions.
Letitia, you want to touch on derogatory marks? Yeah, what does that mean?
Right. So derogatory marks are your collection items that show up and they negatively impact your score, but there's no way for them to positively impact your score. So if you have any collection items, this is why paying them off or getting them removed is helpful, because they only can bring your score down. So it doesn't have an actual separate score from the other portions of your credit report. This is factored into your total number of accounts.
And the last item that contributes to that credit score we have is what's called a hard inquiry, as opposed to a soft inquiry. So a hard inquiry is a lender making a loan decision. Right?
Right, and typically you don't want to have more than 1 or 2 inquiries a year. The more inquiries you have, it's going to pull your score down. One, because it shows lenders that you desperately need credit. The only exception would be like if you're doing a major purchase. It's reasonable if you're getting an auto loan or a mortgage that you're going to price shop. But you want to make sure that when you do those inquiries for either purchasing a home or getting a vehicle, that they're within a 30 to 45 day window. If they're not, they will show up as 2 separate inquiries, whereas FICO combines them if they're within that 30 to 45 day time period. But Vantage Score does not. It counts every single one.
Interesting. Now that's it, as opposed to a soft inquiry or a soft pull. That would be any one of us going to pull our credit report off of a site. That doesn't affect your score. And if you're ever wondering whether someone you're dealing with who's got to pull your credit, whether it's a hard or a soft pull, you just got to ask, because sometimes it's not obvious.
Right. And soft pull, just if anyone doesn't know, this is when you're like, if you're pulling your credit report, is considered a soft pull. It does not affect your score. If there's someone looking to provide you credit, you'll see soft pull. They're looking to, see if they want to provide you with service, but you didn't request that. And then a hard pull is when a lender pulls your credit and it's going to count as an inquiry. So that, just to, clear that up.
Mm-hmm. And another example of a soft pull is a background check that an employer might perform on you.
We have one more question from Karina. What is considered a good time length on accounts for credit score?
So 7 years or more is considered a good length. On average, though, most people, it's going to be same thing. It's an average of all of the accounts. So say you have a mortgage that has 11 years and then you have a card that's only a year, it's going to be the average of all of your accounts. But usually it's 7 years or more is going to be considered a good length of time.
You know, one of the reasons that the Vantage score was created is it was trying to address in part the disadvantage for people who don't have that lengthy credit history. So they look at a shorter history, and you're able to perhaps get a Vantage score on your on yourself, whereas maybe you don't have enough history to get a FICO score. Those are great questions. So now we're going to talk about score ranges a little bit. And as you all nailed it earlier, the 850 is the highest score you can get, 350 is the lowest. But there's some tiering of the scores that we see. And now we've got a poll. So we're going to pick a credit score for a car payment estimate, because Letitia's going to walk us through a couple of scenarios to show you how important it is and how much more it might cost you if your credit isn't where you want it to be.
Yes, it's game time, everyone. We're going to play one more game.
This one's called Credit is Right.
Credit is Right. And we're going to purchase a home and purchase a car today. So to help out, we're on the first poll. I want you guys to select what type of score we're going to have when purchasing this vehicle, and majority is going to win. So please complete the poll. Okay, so it looks like we're going to go to the dealer and we have a 670 credit score. So knowing this, that we have a 670 credit score, what do you think your monthly payment would be? Please comment in the chat if you did not already see the answer.
It's a good range of numbers.
Yes, we got 275, 300, 201, 325 to 350. Someone said 450.
Okay. Okay, now we're going to look at those different credit scores and how they affect your payments.
Okay, so with a 670, you could expect that for this $13,000 car, 5-year loan, your payment would have been $290, $250. and overall you would have only paid $17,550 for the vehicle. Now, as you can see, having a 500 credit score or lower, you're paying double. And after the life of the loan, you would have bought 3 of these cars because you would have spent $32,493.50. So is this something to think about when, purchasing a vehicle? And we all know, because we discussed this earlier, about why credit is important, but having a better score, this is why it's important. It saves you a lot of money.
Still a $13,000 car with the difference is interest. You get charged a much higher rate. That's the bottom line. Great.
Okay. So did you know a small change in your credit can mean the difference between an approval or not getting approved? So, or even the difference of $120,000. So if we purchased a home for $120,000, 30-year mortgage, which is 360 payments, if you have less than a 640, you're not going to be approved. Some banks will, back to that subprime lending, can go lower if you have a bigger down payment. So back to this, when you have a lower score, you're dishing out more money. But even if you have a good score, so say you have a 670, you're paying almost $120,000 more than if you had a better score for the same house. So after the 30 years, you would have paid $363,000 for the house versus someone with the excellent score, they would have only paid $225,000. Thanks everyone for participating in that game.
That was great.
Yeah.
So now we're going to touch on how do you improve your credit? The first thing you got to do is you have to pay your bills on time. Really, that's, if you think back to that pie chart we looked at, payment history, on-time payment history, length of payment history, pay your bills on time, and keep your total credit utilization under control. Those are probably the 2 biggest things. But like we also talked about before, catching errors and challenging the items on your credit report, that can make a pretty significant difference.
Right. So just set yourself up for the best possible scenario. Only use credit if you can purchase that item, or don't use it at all. It doesn't hurt to have 0% on your credit card. Most people with scores above, with the 850 score or not, they're using 3% of their credit cards, which is amazing to think. Like, they're literally not using their cards at all, and that's how they're keeping their score high. So just set yourself up. A lot of credit cards have the ability for you to do automatic minimum balance, so you never miss a payment. If you, for some reason, miss a payment, but you have a long history with that collector or that creditor, you can send what is called a goodwill letter. Put it in writing, mail it off, and you just ask them to basically remove the one missed payment, which can instantly boost your score. Paying your bills on time, keeping your credit card bills low, keeping your inquiries low. Remembering no more than 2 a year. All these things will help you improve your credit.
And this ties back to our last session last week. It's budgeting. So just don't extend yourself beyond what you can afford. Once you find out what that payment is on that asset you want to purchase, whether it be a piece of equipment that you have to invest in your business, or an auto, or your home, plug that in and see if that's within your budget, and then go from there. Just don't overextend yourself.
David and Letitia, I have a question for you. What if, a situation forced you to buy a car at a high interest rate because your car broke down and of course you got to get to work, got to take your kids to school, right? So you buy your car at a high interest rate, but you're making your monthly payments on time every month. Would you recommend approaching the creditor and asking them to lower your interest rate after a certain period of time? Is that something a creditor would do?
I've never heard of a creditor doing that. I know a lot of times you'll see the option to refinance to a lower payment. And usually the way that that works is they're offering you a lower interest rate, but they may be extending your terms. So you might have already had just a 3-year loan and they might extend it to 5 or 6 years. Best case scenario in a situation like that, where you purchased a vehicle and you overpaid for it, is just to try and put as much money towards the principal and pay it off sooner. Maybe even making bi-weekly payments, because you can slip in a couple extra payments just by paying 2 times a month to get rid of that debt. Generally, you know, with the way that cars are nowadays, who knows if you'll even have that vehicle more than 3 years, just because the nature of, you know, car accidents and things like that. So just focus on keep paying the payments on time. If it's beneficial to you to get a lower payment, I would still, you know, do the refinance, but pay it off aggressively towards the principal so you're paying it off sooner.
Very helpful.
Thank you.
Good question. Thank you.
So now we're going to touch on the 5 C's of credit. You folks may have heard that term. This is what lenders, business lenders, will look at to evaluate whether or not they're going to extend you or your business a loan or whatever it is you're looking to buy. So the 5 C's are collateral. That's, do you have assets that will support the loan, that'll kind of secure that loan on your behalf, so the lender is not out there without some assets behind it. Character, so that's how responsible you are with money and integrity, and they'll evaluate that as best they can. Capacity, that's ability to repay that loan. And that's, do you have income, a steady job, or a business with good prospects. Capital is also one of those 5 C's of credit, and that speaks to whether or not the owner of a business has an equity investment in the business. Lenders like to see that owners have some skin in the game. If they're going to extend financing on behalf of the business, they certainly want to see that the owner has some skin in the game. And conditions, this is more of a vague term, but it talks about the terms of the loan, the characteristics of the industry, the economy. Can those risks somehow be mitigated or managed by the lender? So they evaluate all these types of things in terms of making that loan decision. And then if they pull the trigger on it, what's the rate going to be? Tisha, I don't know if you wanted to add anything to that.
No, I think that you covered everything great on that one.
Now we have the dreaded 4 Ds of credit. We've actually got 5 Ds of credit, yes. And these are tough, yeah. So
yeah, debt, disaster, divorce, and disability. So just tying it together, personal finance affects your credit. So if you're preparing yourself to be able to have an emergency fund or have some type of insurance in place to help with these things when they arise, you'll have less of a chance of it negatively affecting your credit, because all of these things will affect your credit if they happen to you. It's a guaranteed.
yeah, they all affect your ability to pay, quite honestly. So it makes it just more difficult for you to make payments.
Or even with disability, I know in New York State, you have to have a certain level of income to qualify for an auto loan, which I believe is $13,000 annually to even qualify to get a car note. Now, if you just want to purchase a car, it doesn't matter. But if you're trying to get a car note, then if you're on disability, that could affect your ability to even do that. And with divorce, some items that your spouse have could be considered debt that both of you owe. And if you get a divorce and they stop paying, it could negatively affect your score. Or even just with disaster, like everything happening with COVID, and people not being able to pay. This is something that nationally we've been getting help with, but normally when there's just regular disasters like Hurricane Katrina or anything like that, you don't see as many outlets. So things to think about, and it's a good reason why not to take on more than you can handle.
I had a question come into me personally. It says, the question is, if you max out your credit cards, would it be recommended to take out a personal loan for debt consolidation to improve your credit score if you're looking to buy a house in the near future?
Well, there's a lot of factors with that. When you're purchasing a home, they look at your debt to income ratio. So even though your monthly payment is going to be smaller because you're consolidating all of the cards onto a personal debt, your debt to income ratio is going to remain the same or higher because now you have that personal loan. Also, the personal loan could be considered a secured debt. They can possibly make a lien on your home, whereas credit cards are usually an unsecured debt unless you get a secured credit card. So not usually be, if it's going to help you pay it off sooner, then it would be a good option. But if not, if you're just going to do that and then apply for the mortgage, it's not going to be a good solution for that.
So be aware of the terms of the loan. Right? You want to see if you're pledging assets, if you're securing the loan with your own personal assets, that's something you want to be very aware of. And FICO made some changes that they're implementing this year that are being rolled out that make it a little harder to game the system. They're trying to focus more on trend data. So consumers who have seen their credit score improving over time are likely going to do better as a result of these FICO score changes. But conversely, consumers whose credit score has been deteriorating recently probably won't do as well. So, because they are trying to maybe move a little bit more away from this point in time evaluation of your credit, where you could always game the system and do a debt consolidation perhaps on a single date and right before you apply for a loan, and they're steering in a slightly different direction this year, trying to give more weight to history.
Right.
Go ahead. I'm sorry.
So before we get into the business credit, if you want to comment in the chat, if you have a business or looking to start a business, just so that we can know, how much to touch on this topic per se. Yeah, so just comment in the chat if you have a business, if you're looking to start a business, that way we know.
I'll let you guys enjoy some Jeopardy music again.
Excellent. We got a handful of folks who have businesses, some multiple businesses. So we're gonna not spend a lot of time in business credit. And the reason is that entrepreneurs you know, of new businesses or young businesses oftentimes don't have business credit. The business doesn't have enough history and hasn't established credit. So the owner's credit becomes so important. That's why we spent so much time today talking about your personal credit, because if you can get your personal credit to where you need it, then getting a loan for your business is going to be that much easier. And you'll already be on the road of certain fiscal disciplines and ways of doing things that are going to make your establishing and maintaining your business credit that much easier.
Right.
But so this next slide just kind of touches on what I just mentioned, that new businesses don't have much of a credit history. So lenders, trade partners, they're going to rely on that owner's credit. One way you can build your business credit is you apply for a business credit card and deal with vendors who report payments on your trade credit terms. So if you're able to establish credit terms with a supplier or a vendor, find out, are they reporting those payments, and then make those payments on time. You'll build that history that way. If you have a business bank account, after you've established that you're responsible with that bank account with that bank, then apply for a business credit card through that same bank, because you've already established that relationship. So the personal credit is almost the business credit when you're right out of the gate. And a couple of additional things to think about when you're trying to get a business loan. If you don't have any credit, you might be asked to make a personal guarantee. And we kind of mentioned this a little while ago about a personal loan. If you took out a personal loan with a finance company, you might have to pledge personal assets. So if the loan goes bad, well, the lender has some backing. So something else you want to do once your business is off the ground is you want to apply for a DUNS number, what's called a DUNS number. Dun & Bradstreet, the information systems company, has a massive database of businesses that will allow one business to check on another's credit history before you go into business with somebody, whether it be a customer or a supplier or even a business partner. You can check the business's credit history by pulling a DUNS report. And it's free to establish a DUNS number. And it's an important step to get your business on the right footing to get that credit history built out.
Right. And another way to access your business credit report is navi.com. In the chat for you. It's free. It's a free site, and it'll let you know if your business has a credit score and what it looks like. It also will give kind of suggestions on things that they're able to get business credit. I know one that
Letitia, you went silent.
I think we lost Letitia.
Oh no.
Oh no.
Uh-oh.
Oh, she's back. You just got to unmute yourself, Letitia. Oops. We're coming to the end here, and then
Letitia?
Letitia, can you hear us? You're on mute.
Okay, I'm sorry, my screen had went out. So another way to access your business credit is through navi.com, which I put in the chat. Another thing to think about is a lot of times if you're a new business, you can try to apply for business credit through PayPal. They track, if you have a PayPal business account, they'll track like your uses of that account. And most of the time, if they send you an offer, you have a good chance of getting approved for that.
Excellent. PayPal and Navi?
Yes, Navi is to check your business credit score, because a lot of times, depending on how long you've been with having your business established, you'll have a score separate for your business, and they'll allow you to see that.
Great.
Okay, so I know earlier in the presentation, I had mentioned that you would have an opportunity to work with me directly in regards to your credit. So we're gonna put the link in the chat to sign up for the credit counseling session. And we'll work one-on-one to go over your credit and some things to help you improve it.
All right, so I'm just gonna slide in here real quick before we go ahead and open up the Q&A session. So as I mentioned early on in the beginning of the session, now's the time to go ahead and send me your choices for your restaurant voucher. Really do appreciate you kind of hanging with us throughout the session. It's not over yet, but we want to make sure that, you know, you get rewarded for kind of going through the entire session. So if you could just send me a direct message, and I will put my I'll put my email in the chat. So it's yzapata@pathstone.org. All right. Please just send me your options. As you can see, Adam just put them in the chat. So you have, in Buffalo, we have Manna, Taste of, and then there's a fire truck. And then in Rochester, we have Peppa Pot, and it's actually Damn Good Chicken. I did say it incorrectly earlier on, but either way, the chicken is good. So those are your 4 selections. Please email me what you prefer, and I can go ahead and get those vouchers out to you, you know, so you can enjoy some great food from local restaurants, right? This is what we're all about, supporting each other. And supporting each other, we can really make sure that our community grows and that the money stays within us, right? So go ahead and make your selections. Like I said, send me it in the chat. If for some reason, you know, you don't get a chance to put it in the chat, my email is there. And then, you know, I can go ahead and take care of that as well. And I will now pass it over to Letitia and David to go ahead with the Q&A session. Thank you, folks.
Yes, thank you for sticking it out with us. Please comment in the chat any questions that you have that we have not addressed, any aha moments, anything that you felt like you learned, please comment in the chat.
Or anything we can do better. We'll take it. We like constructive criticism. So.
Yes.
There's that link as well in the chat for credit counseling with Letitia. So take advantage of it, folks. I mean, I don't think it's every day that you have someone super accessible that's ready to help you get your credit back on track. And even for some people, you know, where they feel like, oh, I think my credit is pretty good, or I think I'm doing, you know, I think I'm doing well. It doesn't hurt to check in and just see, maybe there's one extra tip that you could be doing that's going to boost your credit. So take advantage of that, folks. And again, any questions you have, feel free to put it in the chat, or if you want to unmute yourself and just, you know, say it verbally, please go right ahead.
Yes, I see we had a question. What is the one thing you can do after this call to start improving your credit on your own? One of the things that we mentioned earlier is to pay down your credit cards to get that utilization down. So I would say just today, maybe, since if you did your homework, you have your credit report, go through your report and see what is the total balances of each of your credit card, and see what you would need to do to get it to 30% or even 50%. Bringing it down to 50 or 30% is going to have an enormous impact on your credit score. So if you don't have a credit card, maybe look into getting a secure card or a credit card so that you can have a score report. That portion of your score is going to automatically boost your score, because that you don't have a credit card, you're going to, if you get one, it's going to increase your score. And I've seen, with some clients where it boosted their score 40, 60, 50 points just by getting a credit card, because they didn't have that at all. And that's a big portion of your score.
I would add you want to pull your reports and then challenge the information on that in those reports. Question it and check it for accuracy, and don't take it for granted that it's correct.
Right. So thank you for the feedback. I see that you guys like the breakdown of how the scores, how is the scores made up. So yes, please keep commenting, any of your aha moments, any questions that you have. So there was a question here, can you still pay off your account if the account is closed? So it depends on how the account closed. So if the account closed and it's through a credit card company, but it's the beginning stages of default, most of the times they will allow you to make payments and even do payment arrangements. And those payments are will be reported, and then the account will show as a zero balance once you pay it off. If it's closed and they completely stop, dealing with you, they sell the account to a collection agency, then that is a different situation, and you will want to try and pay it before it's reported to your credit report. If it's closed from a collection agency, I would challenge it first to make sure that they have the proper documentation showing that they have a right to collect on that debt before you do anything.
Letitia, we have looks like 2 more questions coming from Namis. Question, and sorry if I butchered your name, I'm really sorry. Question number 1, it says, I've noticed that if I don't use my credit card 1 month, my score drops. Why is that? That's the first question. And then there's another one. This person asked, it says, how soon should I pay off my credit card bill after I use it? Sometimes I'll pay as soon as I use it. Is that good?
Okay, so as far as your score dropping from not using your card, I would check to see possibly, even with Credit Karma, because usually it'll show why your score dropped, because I've never seen where not using your card unless your utilization went up would affect your score negatively. And then as far as like paying off your card, you have to be careful with that. Some credit card companies have a limit on how many times you can pay your bill within a 30-day cycle. So if you are planning on paying it off strategically, you want to make sure that it's before your due date so that you're not paying late. And then say you use it after the due date, you want to make sure that before the statement date that you make another payment if you need to, so that it's not reporting a higher balance on your credit report, because the statement date, whatever the balance is on the statement date, is the date is what's going to show on your credit report, even if you paid it down 4 days before on your due date. And usually your statement date is between 1 to 7 days. So that's a great question. But be careful, like if you use your card frequently and your credit card company only allows you to make 4 payments a month, then you want to make sure that you're not, putting yourself in a situation where you have a higher balance on there for no reason.
I want to throw this out to the business owners. Were there any entrepreneurs, any of the business owners, did they suffer any credit issues as a result of the pandemic over the last few months? If you wouldn't mind sharing any of that.
Right. I noticed just in general with the credit card companies, I read an article, for example, with Capital One, they in May normally process about 1.4 million credit card applications. During COVID, they pulled back and they only approved about 480,000. So I know that getting approvals, even sometimes that you would have been able to get approved for last year, you may not be able to get approved for this year, even with the same score, because a lot of the creditors are pulling back. JP Morgan Chase, one of the largest home lenders, they're not offering as many home loans right now because of the whole COVID situation. So yes, please comment what your personal experiences is with that.
It looks like we have another question. It says from Jalisa, I had a small medical debt that was showing on my Credit Karma, paid it off completely and called to have it removed. It was removed. My credit score did not go up from paying it off. Any idea why? It made my score go down when it was put on.
Usually depending on how large the medical debt was, it's not going to have an impact on your score, because FICO, if you have a debt that's less than $100, they don't include it in their calculation for scores. Whereas on, Credit Karma, since it's a Vantage score, sometimes they'll, show as a negative, it's going to pull your score down. It's not another one of those situations where the collection items pull your score down, but they don't help you necessarily when you pay it. But that was a great question. Thank you.
And it looks like, I think going back to what Dave had mentioned before, someone mentioned, so they were in the process to apply for business financing and all that stopped due to COVID. So, could not get the loan and pay down same high interest debt. FICO has gone down.
Yep.
I'm sorry. I didn't see that question in there. Can you read that again for me?
Yeah, sorry. I think it went to me directly, but I don't know if that was intentional. It says, I was in the process to apply for business financing and that all stopped due to COVID. So I could not get the loan to pay down some high interest debt. The FICO has gone down.
Mm-hmm.
Oh, yeah. Thank you for sharing your experience. I know that was definitely hard to go through considering a time like this.
Absolutely.
I would suggest, I don't know if you've already checked into the grant that they're offering for small business owners. They recently got some additional funding for the PPP grant, and I know Forbes put an article up. So even if you get denied for the loan, the grant gets processed in like 7 days. And for like smaller businesses, depending on the scale of your business, you can get $1,000. It's not much, but it's helpful in situations like this, and it's a grant that you don't have to pay back.
Yeah, the SBA has what's called an EIDL loan, which it's an automatic $10,000 grant if you're eligible for it. The PPP window has been extended to August the 8th. So anyone who's still interested in a Paycheck Protection Program loan for their business, that's still a possibility for the next couple of weeks. But I do encourage you to check out the SBA site.
Right.
All right. Any more questions, folks?
I have one.
Hey, great man.
Some clarification. David, when you were describing the 5 C's of credit, you spoke about capital, and you said again your skin, something like that. You like having experience, basically. Right? But in my sorry, there's a lot of noise. So, in my interpretation of capital, I thought I had to have a certain amount of money like how much money I have, how much capital I have, and that's how they determine that area of credit, I guess. And I guess that's it. It was confusing with the collateral because collateral is the assets you have, and
Right.
so that's why I was a little confused.
It's a good question. I apologize for not explaining that very well. When I said skin in the game, that what I was trying to convey was, has the owner invested in the company? And so the lender wants to see that the owner has invested in the company. Collateral assets of the company, those got financed somehow. Either the owner paid for them out of their pocket, or they got another loan to pay for those assets. But if you think about your business's balance sheet, how all your assets get financed, how all that stuff got paid for, either out of your pocket or somebody else's pocket. When you go to a bank or a pest owner or anybody, they'd like to see that you've got some equity investment in your own company. That was what I was trying to, that's the capital part.
Right. Yeah.
That
That was it. Thank you. I appreciate it.
Sure. Thank you. So do we, Sandra. Thank you for contributing.
Well, thank you, Sandra. She says, well done program today. Thank you definitely to our 2 stars of the show today, David Krause, Keisha Harris Officer. If folks don't have any other questions, I'm actually going to have Adam kind of swing in and just give you folks a heads up on another workshop that we actually have starting on Monday. It's called Boot Camp for Startups. So Adam, if you can go ahead and let the folks know what that's about. You might be on mute. I can't see them.
Yeah, he's
So
still
I
muted.
was into my streak. Sorry, guys. So let me figure this out. So thank you everybody for joining us today, and thank you for being so engaged. We really appreciate it. It's always refreshing and encouraging to have so many people involved and to take advantage of these free courses with us. So one free course we have coming up, like Jahida said, is Startup Boot Camp, which starts on Monday. It's at noon, from noon to 1:30, just like Money Talks. And we're going to start off with talking about your small business ideas and formulating those ideas and getting them to the point where you understand how you're going to bring in revenue and making sure you understand your market, who your customer is, and understanding your strengths, your weaknesses, and then the opportunities and threats that exist in the market. So that's an 8-week course, and it's 7 classes, and then the 8th week is the graduation. So as long as you come to 4 of the 7 class sessions, you get to participate in the graduation on the 8th week, and you will also be invited to go to our level 2 series, which starts after boot camp. So that'll be in the fall, and that is kind of a graduated course to kind of help you get to take your small business to the next level. So we'll be sending out the link for that here in just a minute. Looks like Jahida has actually put that in the chat. So if you guys want to sign up for that free class, again, it's totally free. And one big benefit is by the end of the class, you will have an actual business plan to be able to use as a roadmap for success.
Excellent.
All right, folks, I actually ended up putting, there's 2 links. I would recommend going to the second one that says bootcampforstartups.eventbrite.com. That one will take you directly to the registration for bootcamp and all of its sessions. The first one, I think it'll just take you to our main page so you can see all of our events that we have going on. But definitely, like I said, just to make life a little bit easier, you can go directly to the second link, which is bootcampforstartups.eventbrite.com. Thank you, everyone, for joining us. As always, you know, we just appreciate you spending your time with us. We hope you enjoyed the session, all of the games, and the information most of all, right? What are you going to do when you leave this session? How are you going to get your credit on track? And maybe if it's on track, how are you going to get it to a perfect score, right? Because there's always improvement that I think we can do in our lives, and credit is just one part of it. So thank you again, everyone, so much for joining us, and we expect to see you next week, Wednesday, same time, same channel. If you ever have any questions, please feel free to reach out. We are more than happy to talk to you. So thank you, everyone. Take care.
Thank you.
Thank you. Have a good night.
Bye-bye.